Right now, somewhere in Australia, there's a private seller refreshing their carsales.com.au listing for the 14th time this week, dropping the price again, wondering why nobody is calling. Their SUV has been sitting in the driveway for 6 weeks. The photos are good, the description is honest, the rego is current, and still silence. What they do not know, what nobody told them when they drove off the lot, is that the vehicle they are trying to sell has become one of the most unwanted cars in the Australian used market. And they are not alone. Thousands of Australians are in exactly the same position right now, trapped in vehicles that the market has quietly decided it no longer wants, watching their financial losses deepen with every passing week. The data behind this is not opinion. It comes from auction house results, Redbook depreciation curves, dealer wholesale pricing, and private listing turnover rates tracked across the major platforms. What that data shows is a clear and deeply uncomfortable pattern. 12 specific SUV models that Australian owners are listing in unusually high volumes, at unusually high rates of price reduction, with unusually long days on market figures. These are not bad cars in every sense of the word. Some of them were genuinely popular when they launched. But the Australian used market is a brutally efficient machine, and right now it has made a very clear judgment about each of these vehicles. The first model that appears consistently at the top of the distressed seller data is the Mitsubishi Eclipse Cross. When Mitsubishi relaunched this nameplate in 2017 and brought it properly into the Australian market in 2018, the pitch was compelling. A sporty crossover with a distinctive rear roofline, priced from around $40,000 in mid-spec trim. Families in suburban Adelaide and Brisbane bought them in reasonable numbers, but the Eclipse Cross suffered from a problem that took time to fully reveal itself. The market simply does not believe it is worth what sellers are asking. Current private listings for 2019 to 2021. Eclipse Cross models are sitting in the $22,000 to $28,000 range, and they are sitting there for weeks. Redbook data shows depreciation hitting 40% or more within 4 years of purchase. A family who paid $42,000 for a 2020 Eclipse Cross PHEV is now looking at a private sale value closer to $24,000, an $18,000 loss in under 4 years. Dealers at auction are offering even less, sometimes as low as $18,000 to $19,000 wholesale. The PHEV variant compounds the problem because Australian buyers are wary of second-hand plug-in hybrids with uncertain battery histories, and Mitsubishi's charging infrastructure story does not help confidence. What makes that situation particularly troubling is that it mirrors almost exactly what has happened with the Nissan Pathfinder. The current generation Pathfinder, which arrived in Australia in 2022 priced from around $65,000, seemed like a confident return for a nameplate that once dominated the family 7-seat segment. But the market has responded with hesitation. Wholesale auction data from the eastern seaboard shows Pathfinders selling at prices well below what private sellers are expecting, often clearing at 12 to 15% below the Redbook private sale guide. Owners who purchased in 2022 and 2023 are now discovering that a 2-year-old Pathfinder with reasonable kilometers is genuinely difficult to move above $52,000 privately. For a vehicle that costs $68,000 with a few options ticked, that is a savage reality. The Pathfinder's problem is partly competitive. The Kia Sorento and Hyundai Santa Fe have taken a vice-like grip on the 7-seat family SUV space in Australia. And buyers comparing the three on a dealership forecourt consistently lean toward the Koreans on both value and dealer network confidence. The story becomes significantly more complicated when you examine the Volkswagen Tiguan Allspace. Now, to be clear, this is not a bad vehicle. The Allspace is genuinely competent, a well-engineered 7-seat version of one of the world's most popular compact SUVs. But Australia has a specific and well-documented, complicated relationship with Volkswagen ownership costs, and that sentiment is hammering resale. A 2020 Tiguan Allspace 162 TSI Highline that originally sticker-priced around $62,000 is now appearing in private listings across Sydney and Melbourne, anywhere from $38,000 to $44,000, and many of those listings have been on market for 40 days or longer, with multiple price cuts already recorded. The NRMA and RACEQ have both flagged DSG transmission servicing costs as a concern area for owners, and that information circulates in buyer communities. When a prospective buyer in Brisbane reads the ownership forms before making a decision, and they do because Australians research carefully, they encounter enough DSG anxiety to send them back toward a RAV4 or a CX5 instead. That consumer anxiety has a direct and measurable impact on how fast Allspace listings clear, and right now they are not clearing fast at all. Sitting in an equally uncomfortable position is the Jeep Grand Cherokee WK2 generation, specifically the 2018 to 2022 models before the full WL redesign. The Grand Cherokee had loyal supporters in Australia for years, particularly among buyers who wanted American-style presence and genuine off-road capability without going full hardcore. But reliability perceptions have accumulated over years of owner reports, and the financial consequences are stark. A 2019 Grand Cherokee Limited with the 3.0 diesel, which originally sold for around $72,000, is now appearing at wholesale auction for figures that make even hardened car dealers uncomfortable, sometimes clearing in the high 30s to low 40s. Private sellers are listing at $50,000 to $54,000 and watching the inquiries fail to materialize. Jeep's dealer network contraction in certain Australian markets has not helped, because buyers are acutely aware that ownership of a vehicle requires accessible servicing, and fewer Jeep dealers in regional Queensland or South Australia means higher perceived risk for the buyer. That regional concern is something that also surfaces persistently in data around the SsangYong Musso, a ute-based SUV that found a small but genuine niche in the Australian market before the brand's global financial difficulties created serious uncertainty about parts supply and long-term dealer support. Australian buyers who purchased a Musso between 2019 and 2022, attracted by its genuine towing capability and aggressive pricing in the mid-$30,000 range, are now finding that uncertainty has collapsed resale confidence. Listings on carsales.com.au for Musso models are accumulating like nobody's buying them, because largely nobody is. Wholesale auction results are telling. Musso models that cost $35,000 new are clearing at auction for as little as $15,000 to $17,000, a depreciation rate that is genuinely alarming by any standard. For a tradie in regional Queensland who bought one to tow his work trailer and run gear on the weekend, this is not an abstract financial concept. This is money that is gone, and gone faster than almost any comparable purchase he could have made. The situation with the Ford Escape should be looked at carefully because it illustrates a different mechanism at work. The Escape returned to Australia in 2021 after a hiatus, rebranded and redesigned, priced competitively from around $38,000. Ford's marketing was optimistic, but Australian buyers cast a long memory. The previous Escape generation had accumulated a reliability reputation in Australia that was difficult for the brand to fully shake, and the new model's turbocharged 3-cylinder and 4-cylinder engines generated enough uncertainty in online communities to suppress demand. Current resale data shows 2021 and 2022 Escapes listing privately in the $26,000 to $31,000 range with extended days on market that suggest buyers are hesitant. Ford's own trade-in valuations at Sydney and Melbourne dealerships are reportedly coming in even lower when the Escape is offered against a competitor test drive. The irony is that the Escape is, by most independent assessments, a reasonable vehicle, but perception in the Australian used market does not always track reality, and right now perception is losing the Escape serious money. And what makes the Escape's situation feel almost mild by comparison is what has happened to the Renault Koleos. The Koleos in its current generation, sold in Australia from 2017 onward, was a comfortable, well-spec'd midsize SUV that punched above its weight on interior quality and offered genuinely competitive pricing. Yet its depreciation curve in Australia is among the steepest in the segment. The 2019 Koleos Intense that originally cost around $45,000 is now, in the private market, struggling to reach $26,000 to $28,000. At auction, wholesale figures for comparable examples have been recorded in the low 20s. The core issue is brand confidence. Renault's Australian dealer network is thin. Its resale story has been an industry problem for years, and buyers who do their research on Redbook or speak to a mechanic who services European brands come away nervous. Sellers of Koleos models in Perth and Adelaide are reporting inquiry levels that are almost non-existent unless the price sits noticeably below comparable Japanese alternatives, which destroys any financial logic for the seller. The pattern deepens when you look at the Mitsubishi Outlander PHEV, specifically the third-generation model sold in Australia from 2016 through to 2021. At the time, Mitsubishi was making considerable noise about the Outlander PHEV as a forward-thinking choice, and Australian buyers in reasonable numbers agreed, paying $48,000 to $55,000 for them. The problem is layered: battery degradation anxiety, the arrival of far more capable and more prestigious EV and hybrid alternatives, and a general market downward repricing of older PHEV technology. A 2019 Outlander PHEV ES in private hands in Melbourne is realistically worth $22,000 to $25,000 today. That is a loss of between $25,000 and $30,000 in under 5 years. Dealers are reluctant to stock them because they move slowly and require customer education that retail staff find difficult to deliver consistently. Wholesale, they are clearing for prices that would shock the original buyers. The Subaru 15 also appears in the distressed listings data with more frequency than the brand's loyal following might expect. The XV occupies an awkward position. Too small for growing families, more expensive than base Subaru Impreza hatchbacks, and now facing serious competition from the Mazda CX-30 and the refreshed Hyundai Kona, both of which present a more contemporary ownership proposition. A 2020 Subaru 15 2.0iS that cost around $35,000 new is listing at $23,000 to $25,000 and sitting. The days on market for 15 listings has crept upward, and price reduction frequency on carsales.com.au listings has increased. The XV's problem is less about reliability. Subaru owners are historically loyal, and more about a product positioning crisis. In a segment where freshness and technology perceived value matter enormously, the 15 has begun to look dated, and that perception costs private sellers real money every month they hold on. There's a similar but distinct dynamic playing out around the Haval H6. Haval entered the Australian market with genuine aggression on price and specification, and the H6 found buyers who appreciated getting a feature-laden SUV for around $30,000 to $35,000 in 2021 and 2022. But the used market is now delivering a harsh verdict. Brand maturity and parts availability concerns are circulating among buyers. Private listings for 2021 Haval H6 models are appearing in the mid to high teens, sometimes as low as $17,000, for vehicles that cost $30,000 just 2 or 3 years ago. That is extraordinary depreciation. At auction, H6 models are moving, but only at prices that represent losses of 40 to 50% in under 3 years. The buyers who took a chance on Haval in the early years are paying a genuine financial price for being early adopters in a market that was not yet ready to absorb the brand's resale risk. The situation around the Kia Stinger GT, and yes, it qualifies as an SUV-adjacent sports sedan that the market is treating with used car SUV logic, actually reveals how even well-loved vehicles can fall into the unwanted category under specific conditions. Stinger GT models from 2018 and 2019, which originally sticker-priced around $60,000 to $65,000, are now appearing in private listings at $30,000 to $34,000. Some 2018 examples with reasonable kilometers are listing in the high 20s. The sentiment among buyers is that the Stinger's future is uncertain. Kia has not replaced it globally, and buying a sports car with a question mark over its long-term model viability does something psychological to resale demand. Owners love them. Prospective buyers just choose something safer. Rounding out this investigation is the Hyundai Santa Fe TM generation, specifically the 2018 to 2020 models before the significant facelift. This one stings a little because the Santa Fe was genuinely well received at launch, and Hyundai has built real brand equity in Australia. But the pre-facelift TM generation now faces a specific problem. The facelifted version and the entirely redesigned 2024 model look significantly more premium, and that contrast makes the older car look dated faster than its mechanical age warrants. Private sellers of 2019 Santa Fe Highlander models, who paid $52,000 to $55,000 new, are now listing at $32,000 to $36,000 and watching buyers pass in favor of the newer face. Depreciation on this specific cohort has been steeper than Hyundai's overall brand reputation would suggest, and owners who financed at peak pricing are discovering a gap between residual value and remaining finance balance that is genuinely distressing. What connects all 12 of these vehicles is not that they are uniformly terrible machines. Some are genuinely decent to drive and own. What connects them is that the Australian used market has made a collective and data-supported decision that they carry more risk, more uncertainty, or more better alternative competition than the price sellers are asking. The Australian buyer, whether they are a family in Melbourne comparing 7-seaters on a Saturday Arvo, a tradie in Queensland shopping for a tow vehicle, or a first-time buyer in Perth scrolling carsales.com.au on their lunch break, that buyer is doing more research than ever, accessing more data than ever, and is more willing than ever to wait until the price reflects the risk. If you own any of the vehicles discussed here, the practical advice that the data supports is to act sooner rather than later. Every month of holding in a declining resale position costs money. Getting an independent appraisal from a dealer who actively trades in that segment, not just any dealer, will give you a more accurate floor price than online guides. Being priced 10% below comparable listings will almost always generate movement where none existed. And understanding whether your loss is better realized through private sale, dealer trade-in, or auction will depend heavily on the specific model and current auction clearance data for your region. At the Drive Intel, this is the kind of analysis that we exist to deliver. The numbers behind the market that manufacturers do not publish, the trends that emerge in auction halls and not in press releases. The Australian car market is one of the most competitive in the world, and understanding it properly can mean the difference between a smart decision and a very expensive mistake. Stay informed. The data always tells the truth, even when the advertising does not.